start of this year, we shared with the market that we are going to move from what we refer to as an investing phase to a consolidation phase. I guess it's important to give some background to that. The bank has always lived its life in cycles of 5 years. We're currently in the 5th 5-year cycle that started in 2023. Embedded in that 5-year strategy are 3 things that we say are extremely critical to us. The first is that we want to be the world's most respected African bank. The second is that we want to be Africa's gateway to the world. And the third is that we want to be the first truly African global bank. So whilst we've been busy, the things that have driven us are these 3 things. And what is then meant is that we're making the right investments today to ensure that we achieve these 3 things by 2027. The question is, what do these 3 things really mean and why are they important? So when we say respect the world's most respected African bank, what exactly do we mean? Our view. Across the world today, when conversations about the continent, either in finance, politics, or anything else is being discussed, you don't find African banks on the table or African institutions on the table. And so decisions that when they're taken impact the continent without us having to be a voice that determines how that impact will work. We want to break that mold, but want to do so by earning the respect, ensuring that the nature of friends we keep and the people we are close associates with are those who make the calls so that we're invited to the table because we've earned it. And to do so, we understand that we have to operate in markets that are global. That's why we're in London as the most profitable bank in that market. That's why we're in markets like Hong Kong. If you look at the world today, you see that there are 5 global markets, not the fact that they're the richest pool. There might be some of them. So you have New York, you have London, you have Hong Kong, you have Paris, and you have Tokyo. We're in 3 of those 5 markets. By next year, 4th quarter of 2025, even if we slip by 1st quarter of 2026, we'll have Access USA. We're going to be in the US market. Tokyo is not for this investment cycle. So we will be in global markets and we'll have global conversations dealing with different counterparties who operate across the world. We talked about being Africa's gateway to the world. I think when we started that journey, one of the things that was clear to us is that if you had to be the bank that catalyzed trade and payments in the continent, you needed scale. So we started something we refer to as our aggregator strategy. There is no point being a Pan-African bank when you have 0 impact. So it was very clear to us that in every market, we have to compete locally and we have to be a dominant bank in the local market. Of our 19 markets that will be in the continent by 2027, 8 of those markets will be a top 3 bank. In 15 of those markets will be a top 10 bank. In 11 of them will be a top 5 bank. There are only 2 banks or 2 markets where we don't believe will be top 10 by 2025. That's South Africa and Kenya. Kenya we will try, because I think given the numbers we've seen, we might end up at number 12. So 12 to top 10 might be a lot of work, but it's doable. South Africa, I fear that we might not get there except the acceptance level of a Nigerian business changes in South Africa. It's work in progress, but we're in the market and we're going to push as aggressively as we can. Now, but why is it relevant to build scale in those markets? I said we want to be a local bank, firstly, employing local talent, impacting the local economy, working with the local governments or the sovereigns in those markets to make an impact in the markets. But I think importantly, it means that we then have the scale and the size to be able to then force cross-border trade to happen. Now, we have also have a benefit because, you know, from a trade perspective, the most dominant trade banks in the continent were the international banks, or traditionally have been the international banks. So the cities of this world, the Standard Chartered, Societe Generales of this world, BNP Paribas. But they are leaving the continent. The banks who will get the benefit of that exit are banks who have built the scale in those local markets. We're very deliberate in terms of the markets we pick. Now, Africa has 54, 55 countries, but we don't want to be in all 55. We will do business in all 55, but we don't want to have a physical presence in all 55. So which markets have we chosen and why? There are 5 things we look out for. The first is that we're looking for markets where there's rule of law and respect of contracts. The second is that we're looking for markets where there's investor openness and friendliness. So when, as in they show that truly they value partnerships and new investments coming into their markets. The third is market where the quality of education and skill is sufficient. So we are not challenged from a bench strength perspective. Because the question will be, who will manage all of these things you are creating? It cannot be Nigerians are going to Botswana, Nigerians are going to Congo, Botswana, Nigerians, it will not work. And after a while, those markets will begin to revolt. So we need local markets where there's enough talent and skill to support the growth. What will interest you is that the quality of education in many markets outside of Nigeria will surprise you. I'm not sure it will be a surprise because we know that Nigeria's educational system has been challenged for many years. So the quality of talent that we have in Southern Africa and East Africa is actually amazing. And we're thinking of reverse talent pool, bringing them here. Fourth is that we look for markets that there's a lot of cross-border trade. Markets where there's significant trading amongst themselves. Now, if the African Continental Free Trade Agreement works, the AfCFTA office believes that they can move the continental trade from 16% to 60%. Now, let's even say they don't get there. And all they do is from 16 to 20. Significant increase in continental trade and flows that happen. With the international banks pulling out, there has to be a local bank, a local African bank, who is local in every market that takes significant advantage of those opportunities.